All right, good morning everyone, good afternoon depending on where you're tuning in from. Welcome to another live stream here on Facebook. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully you all are doing well. Hopefully if any of you guys came from the Financial Freedom Summit we had earlier this week and this is your first time, let me know where you're tuning in from. Also, before we get started, I just want to make sure everybody can hear me out there. So let me know that, the video's coming through for you. The audio sounds good for you guys. Just want to make sure all of that is working properly. And then we can jump right into it here today. Saves me all day. Awesome. So I see a lot of people already starting to chit chat in there. Awesome. Welcome everybody. Hopefully you guys are doing well. I see a lot of people talking about, different ways of protecting their profits, protecting their, their positions here. And that's what we're going to really be focused on today, is taking a look at some tips that you can use in your own portfolio to help you manage your trades, help you make sure that you lock your profits in when you need to. So that way, it helps remove that stress that can come from when you see the market starting to pull back, even in the slightest, and help you be able to sleep better at night, focus on a more systematic approach, because that's really the main thing we try to do here at VectorVest. We want you to become more systematic investors rather than emotional investors. Emotions can kill anybody's portfolio, so we want to help you focus on how to avoid those kind of situations and also, sleep better at night there. So if that's what you're looking for, you're in the right spot. If you guys, as always, if you guys like these sessions, don't forget to hit that like button, turn on the notifications on our Facebook page so you get notified every time we go live, and hit that share button as well. Get this information out to all your friends, family, investor groups, whatever it may be, because if you're interested in it, most likely you have friends, others that, may be struggling in their own portfolios and need the extra help on, how to get their portfolios on the right track, how to heal a broken portfolio, whatever it may be, we can always help them out. So if you haven't already hit that like button, hit that share button, don't forget to do so. All that helps me out, continues to grow our group we have here that we've built, over the last few years here on Facebook. So once again, good morning, all my high flyers. Glad to have you all here. Appreciate that, Jay. Let's see. All working fine. Everybody's can hear me. Everything's looking good. Awesome. Thank you all for joining in. Thank you all for being here. Well, Evangelist, you're in the right spot. We can definitely help you out with that. Today we're going to be talking about how to protect your profits or how to minimize any loss. Everybody should always be mindful that, you're not going to win every trade. Even the most technologically advanced trading systems out there, such as, computerized trading or automated trading, doesn't win every trade. So keep that in mind. Don't let a small loss, get you down, or don't let a potential loss turn into a big loss. That's really the key, is survival of the fittest, making sure that you can minimize any losses that you have, maximize the winners, and that way you can focus on, not having to heal up after one simple loss. That's really the best thing, the best advice or the best guidance in a simplistic way that we could state it without really knowing too much details on specifics for everybody, because everybody is different. Everybody, really focuses on different things. And so what works for you may not work for others. So that's why we're going to cover a few different tips to help, regardless of what your investment style is, help you be able to sleep better at night, not worry as much on some of your positions that you may have. So if you're in that camp, welcome. You're in the right spot. Let's go ahead, jump right in to see what's going on in the market here today. Then we'll dive into our topic. And as always, we'll finish off with the fan favorite at the very end of analyzing your stocks in less than 20 seconds. So let's jump right into it today. And as we can see right now, we are 3 ticks into the yellow. Therefore, the market timing gauge is neutral, and VectorVest does not advocate buying any stocks this time. No surprise there. If we scroll down a little bit, we get the color guard. We can see those 3 yellow lights that we talked about just a moment ago. The price is actually lower than it was day over day and week over week. But since we have a green light in that price column, we can only get, green light from 5 trading days earlier, we can only at max get a yellow light here today. If we didn't have that green light 5 days ago, we would definitely be seeing a red light showing up in that price column here today. But then we look at the RT. RT is actually surprisingly picking up from yesterday, but still lower on a week over week basis. BSR, same situation. Lower than it was week over week, and actually it looks like it's lower than it was the previous day as well. So very interesting to see if that's going to hold here. And then the MTI, the market timing indicator, the one that looks at the underlying trend of the market. As we can see, it is moving lower day over day and week over week, just like our other key indicators there. After that, we then get the trend column, which shows 2 parts of the trend each and every day. The first part refers to the primary wave, which is just simply looking at the weekly trend of the market. It's down because the market's lower on a week over week basis. Second one is looking at the underlying trend, or just the MTI. As long as the MTI stays above that level of 1, the second part of that trend column will remain up. After that, we then get the calls column, which stands for our confirmed calls. Now, our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. So, as you can see, we still remain in a confirmed up situation for the time being. Also, appreciate that, Lisa. Still wake up at 6. Yeah. Hey, still waking up at 6 all the time. Got a 4-year-old that wakes me up on the dot at 6 o'clock pretty much every morning. Joseph's asking about HYLN. Looking for a buyback below 20. Yeah. Joseph, if you're wanting to take a look at some of your stocks, make sure to stick around towards the end. We will analyze those for you and give you the information that you're looking for on them. All right, so as always, one of the things we always like to do is take a look at the advanced declines. So above me, you can see we do have the VectorVest 7 real-time version going on right now, and it gives you live updates showing you what the markets are doing. Looking at our advanced declines in real time, and we see the major indices are down. So if we're going to be picking up a bearish position or a contra ETF or something to really hedge our portfolio, we always want to take a look at the advanced declines, and we always want to see a 2-to-1 bias in either direction. So either if the market's moving lower, we want to see twice as many stocks declining than advancing, telling us that probabilities are on our side, that it's okay to be getting into those contra ETFs or whatever bearish position you'd be taking. Well, right now we're sitting at about 40% of stocks moving higher and 46% of stocks moving lower. So clearly not that 2-to-1 bias that we like to see. Therefore, bringing us a little hesitation with making any moves, either to the upside or downside here today. So just keep that in mind as we move forward with today's session. But then we take a look at the major indices. Dow's down about 0.2%. NASDAQ's down about 0.7%. S&P's down about 0.25%. VectorVest Composite also down about 0.2% here for the day. Earnings calls near. We are getting into a lot of earnings season, or the next earnings season. So that's definitely something to keep an eye on here. Lisa, we'll take a look at that in a little bit. As always, if you guys have any stocks you want to analyze, stick around towards the end. That's when we analyze all your stocks for you. Show you how you can do so really fast, really simple. Help get the information you're looking for here. All right. So with that being said, let's go ahead and start to talk about today's topic. So as you guys all know, we're talking about stress. Stress that comes from when you have a position, especially after such a rally that we've seen off of the March lows, and you may be up, 50, 100, some even couple 100%. Well, you see that and you think, I want to take that profit, but I don't want to miss out on some great opportunities still if it continues to go higher. But the second it starts pulling back at all, you start to panic, you start to worry, and either, that's your emotions getting involved, and either you pull the trigger too early, you get out of it, or you see it going down, you think, okay, it's going to go right back up. It's going to go right back up, and then it keeps going lower, and then all of a sudden, you, like the deer in the headlights analogy, you start to freeze, and the stock keeps going lower, and at that point you're like, I want it to go back up to those highs. That's when I want to sell it again. If it goes back up, I'm going to take that profit at that point, but it doesn't. So we're going to talk about a few key tips to help you minimize that stress and help you get a more systematic approach to it. So the first one, before we really get in the app today, is just going to be some simple guidelines that we talk here about at VectorVest on knowing on stop criteria that you could apply to your positions. So if you're taking notes, you can go back and rewatch this, but I'm going to try to go a little slower on the rules, so that way if you're taking notes, you have time to write it down. So the first one is always the 1% rule. This is something I learned here when I first started working here at VectorVest almost 10 years ago, and it's something that is still relevant and still true today. The 1% rule simply states that you never want to lose more than 1% of your overall portfolio value in any one position. So let's say you had $100,000, for example. You divided that into 10 stocks evenly, so that's $10,000 a piece in a perfect world. Well, 1% of the $100,000 is $1,000. So therefore, you never want to lose more than $1,000 in any one of those 10 stocks. If you follow that, that would be a 10% stop from your initial purchase price. Now, if you notice the wording on that, no more than that. So that means there is a little wiggle room to help, really mold it to your specific needs. If you're somebody who doesn't want to let that position go down a full 10% from the initial purchase, obviously you can do less than that, but no more than that. This ensures survivability, that, if you take one loss, it's not going to wreck your portfolio to the point that you can't make it back, or that you have to, make a huge winner to try to offset it. This is crucial for any major trading strategy. Second rule of thumb is set yourself a target, if you will. A lot of investors that I've talked to over the years, and I mean a lot of investors, have an issue with knowing when to take their profits. They get into it, they know when they're going to cut their loss, but they never know when they're going to take their profits and what that means for them. This does a lot of damage to your portfolio, because if you don't have a target set, then you're only focused on the loss. Well, you have a decent gain, but then all of a sudden give it all back, then it meets your target for your loss, and then you sell it at a loss, and that repeats itself and hurts your portfolio, because you're just taking loss after loss after loss. And that is never a good trading strategy. No successful trading strategy is focused on, consistently taking losses. I think we can all agree on that. So set yourself a target. And now this is more focused on individuals, but just to get some ideas. You don't have to put it in the comments. You don't have to let me know what your answer is, but ask yourself and be honest with yourself, because that's the only way you're going to feel comfortable about what your target should be. Be honest and ask yourself, what am I happy with as a return on individual stock? That is the question you need to ask. If you're an aggressive trader, somebody who's, swing trading, momentum trading, whatever you want to call it, you may be only shooting for, small gains and a quick rinse and repeat process. So therefore, you may be looking at 20 or 30%. And that's just on the stocks. If you're using options, obviously you can get more leverage, but we're focused on stocks here today before anybody puts that in the comments, because I know I'm going to get that question at some point. So yeah, if you're short term, maybe you're happy with taking a 20 or 30% return in a matter of a week or two, or a couple of weeks or a month. But if you're longer term, you may be looking at more of a 50, 100, 200% gain. That's what you're looking with, or that's what you're looking to be satisfied with if you reach that goal. Now, everybody's different once again. So ask yourself, this is going to be more of the customizable feature of your stop criteria that you can apply, but make it, unique to you. And then finally, the third rule of thumb for some basic stop criteria is what we like to call the 50% rule. Simply put, let's start again. Simply put, anything over a 10% gain on an individual stock, never give back more than 50% of that total profit. So if a stock goes up 10% and all of a sudden it starts pulling back. Let's say, you bought towards the highs of this most recent rally that we've had, and you got a quick gain right out of the gate, but then it instantly started selling off right after that. Well, if you were up 10% and it pulls back to 5%, lock that 5% in. Rather take a small win than let it end up turning into a loss. Another example, if you were up, let's say your target was set for 50%, but you were up only 20% at the high before it started pulling back, and now you're up only 10%. Take that 10%, move to the sidelines, wait for a better buying opportunity. You can always get back into the stock at a later point, but at least you're locking that profit in and have more capital to put into it as the stock continues to pull back, or when it starts to turn back around after a pullback. You have more capital to put into that position at a lower price, leveraging the gains that you've just made. This one particular rule, the 50% rule, can be combined with the other rules that we just talked about. And in my opinion, and my personal investing has been the biggest help of knowing when to take profits. Because it sounds great setting that target at, let's say, 100%. Who doesn't want to double their money on an individual trade? Well, that's great and all, but the likelihood it's going to hit that 50% rule before it pulls back is slim. Unless it's just a nice, slow, steady grind. You have to have something in place for that in-between time. And that 50% rule does exactly that. Now, as I stated, no more than 50%. So obviously, if you don't want to give back half of your total profit, you can make it less than that, but no more than that. That should be the key thing. So if you're more aggressive, you're probably going to have it less than that 50% rule. If you're more conservative and you have a bigger, wider range for your target, then 50% rule may be very useful because it allows you more wiggle room in that stock to be able to feel more comfortable with it. Once again, removing your emotions, but still have a plan in place to know, hey, if it hits this point, I'm taking my profits. I can always get back in later, but I can't go back in time and sell it when I wanted to, unless you have a time traveling device, which if you do, send me a direct message here on Facebook and I'd be glad to see it and we can make a lot of money together. Let's see. Stop limit just below. But yeah, so Benji's saying he sets a stop limit just below the closest support level. And yeah, that's what we're going to get into now. Using technical analysis can greatly increase your probability or your success rate as well. So with that, let's go ahead, jump into a few different things. First, taking a look at more of a technical approach, and then we'll get into more of a proprietary VectorVest approach as well. And Remy's making another comment that, it's a great idea. He likes to change his stop price when he hits 30% profit to save the gain, or a trailing of 10% after it. So you can also do that. If you have a great gain in it, you've met your target, at that point you can either, I've seen it a lot of the different ways, but two of the more common ways are either selling a portion of your position, so that way it's locking that 30% profit in, and then basically that remaining portion of the stock, you treat it as a brand new trade. Or you could, once you hit that gain, change it to a trailing stop of some sort to make sure as long as the stop keeps going up, you're fine. You're staying into it. You're enjoying those extra profits. But the second it pulls back, that trailing stop will get you out quickly and make sure that you're locking that profit in. So that's also another great idea. Let's see. Set a stop limit always close to your entry. So a stop price, Jason, should be based upon your initial purchase price. So now gone down to 10%. So based off of that situation or scenario you just put in there, Jason, if the stock goes up 30% and if it gets down to 15%, that should be your final line in the sand to say, hey, I'm taking my 15%, moving to the sidelines. I have a little bit extra profit now from that I can reinvest into the stock at a lower price. And that could really be a huge benefit to you. And yes, Michael, definitely did. Product placement 101 right there. Let's see. If you have any mentorship. So we don't have mentorships to be in that sense. But we do have a phenomenal support team here at VectorVest. It's where I started at 10 years ago on the floor, answering your guys' phone calls, answering your questions. So if you ever have questions or want help getting your investing on the right track, I can't urge you, or I can't, say it enough. Give our support a call. They're not the kind of support like AT&T or calling your phone company and having to deal with that you just get headaches and don't want to do. Our support staff is very unique and by far the best support team I've ever seen. When in the sense that, they go the extra mile. They want to work with you until you have a clear understanding of the question you're asking and also the answer that they're giving you. We want to do our best to make sure that you become financially independent, you become successful in your investing. That's why we do a free one-on-one coaching to all of our new subscribers as well. So if you haven't taken advantage of that, give them a call, get that going. But also, even after that, anytime you have questions or need help doing anything in the app, or, even if it's just kicking an idea around with somebody who's fluent in the market, give our support a call. They'd be glad to help you out. Now, they're not licensed brokers, so they can't tell you, yes, go sell that stock or go buy this stock, but they can help you with guidance and help you get the insight you're looking for to improve your own investing and improve you as an investor in general. Just give our support a call. And honestly, if you need help, you can go to the more section, the contact us, and you can get our phone number right here. You can give them a call, set that up, or go over it live one-on-one right when you call us. We do it either way, whatever works around your schedule. Let's see. Awesome. Thanks for that comment there, Benj. Hey, I like it. I see a lot of people talking about our support. I appreciate it, guys. I really do. We really do pride ourselves with having one of the best support teams out there. All right, so let's get back into it. Sorry for the rant. Sorry we got off topic, but I hope I helped answer your question. Alton actually is preluding to what we're going to be talking about next. And as we mentioned earlier, we're going to be looking at stop criteria and using technical analysis. So let's go ahead. We'll jump into a watch list that we have here. Let's go to the one most recently built, 917. And we'll use Lowe's as an example. This will be a great example to go over. And we'll go into the graph since we're going to be talking about a more technical approach to it. And so Alton mentioned the 3/8 exponential moving average. So 3/8 is more of a short-term approach to it. But if we go to the gear in the upper left, go to moving averages, we'll toss on a 3. As you can see, I already have it set for the 8 exponential. And we'll toss on the 8 exponential EMA. And we'll go back to landscape so you guys can see it a little bit clearer. We'll go to a 3-month. So with a 3-month, you can see on a short-term basis, you get a lot of whipsawing, but at the same time, you capture when momentum is really starting to build up and get out early. So with this one, we had a buy, let's say right here on the 28th, trading price closed at 162.50. Now 3/8 crossing down as of today, getting you out at 171.50. So $9 a share in about a month's time, maybe even a little less than that. Not bad. As a quick profit making opportunity, that's definitely what you're looking for. Going back, let's say a 6-month time. You can see this really nice, let's just go 1 year. So you can see the 3/8 touched right around June, but ever since, where is that point? Right here towards the lows, the 25th of March. VectorVest was telling us that we could start buying at that point. 25th of March closed at 83.72. Saw a little bit of volatility that got you out here at 161. So even on a short-term basis, this is a momentum trade. This is the definition of a momentum trade. Terrence, that's for day trading? No. As you can see right here, this is not for day trading. This is for short-term momentum trades. As long as momentum is favoring the upside, you stay into it. But the second the 3 and the 8 break down, that tells us that momentum is waning, and that gives you a clear, exact answer of when to take your profit. So there's a trade that you were into it from March all the way up until September. So 6 months almost, just shy of 6 months. And you made 100% profit, if not a little more. That's not a day trade. That's 6 months time. You're holding on to that stock, continuing to have it just go up and up and up, making you more and more money here. And then once again, you found that opportunity where it gained $9 a share in about a couple of weeks time. So not too shabby there. I couldn't agree more there, David. He said, managing profits almost as important as managing losses. That's 100% true right there. So that's our first stock just taking a look at. HZNP. You had a nice great run using the 3 and the 8 back here around, once again, the 25th, 26th at 27.50. You saw it pulling back a little bit on a short term at 49.50, almost 100% profit there. But then you got another run, 48, running, and then finally pulling back right here at 73. Not a bad day's work. So you made $50 a share overall. That's some decent gains there, folks. Decent gains. Very, very nice. We like to see those. Can we apply the 3 and 8 to day trading as well? Yeah. 3 and 8 work phenomenally for day trading as well. All right, so we've got that one. So we see how the 3 and the 8 on a short-term basis, but also just more for a momentum trade basis, can really help improve our accuracy and, help remove our emotions. And that way we don't have to guess when we're going to get out, when we're going to take our profits. This tells us when that's going to happen. This dictates when that's going to happen. So that way it's one less thing you have to worry about. Now, somebody mentioned support resistance. Let's go ahead, toss that on here. We'll just use the default settings that we have here for right now. I will remove the moving averages so we can see the price action a little bit more clearly here. And I'll go to a 1 month. Actually, let's go 3 months. So looking at HZMP, actually, let's find the next stock. That way we're looking at a brand new candidate here. HCA. Yeah. So HCA is a great example. Let's say back here you bought in when you were wanting it to break through that level of resistance. Well, stock was trading about 135, 136. A good level of, or a good way to know when to take your profits on the downside, or take your cut your loss quickly on the downside, is you notice you have another support level down here at around 132. So very, very close to where you got in at. But you have a key level of support. So setting it a little bit below that, giving it to account for a little wiggle room, is a great way to do so. As we've talked about in the past, support and resistance is one of the biggest crowd mentality indicators out there. And it can explain a lot in investors' mindsets on individual stocks. So if you use that as a level of knowing when to sell, if it breaks below that and has followed through the next day, that's where you would set your stop price. So if you wanted, it was trading at 132, let's say you set it at 130 or 131, just to give it a little bit extra wiggle room. You could do that. You could see here, kept you in, and you never got sold out any of those days here, rallied up, hit that level of resistance, may, hold on to it, may see what it's doing, bounce off. But then here on that day it did finally, actually 132.25. So it broke below that and then got you out. Now, stock just been moving sideways, probably going to be, staying away from it to begin with. Sherwin-Williams is another good example. So if you buy your stock here at the level of support, let's see where that is. at around 680, I believe it is. Yeah, 680. That's your support floor. A little bit below that, you have another level of support here at, where is that? See, 670. So $10 a share. Put it a little bit below that, bounced off, and you see you've stayed above that point, giving you some opportunities at those times to either protect your profits or know that, give it some wiggle room, because you have to let it hold on. You have to give it some time to actually develop unless it starts breaking down immediately. As it moves sideways, you can either close out of the position so that way you can invest into another stock that's moving higher, or you could just simply, hold on to it, let it, or ride it out, if you will, to see where it's going to go. If a long-term investor, RS investor, when do you sell? So, Mike, we talked about a few of those. If you're a longer-term investor, you can still use the stop criteria we talked about earlier, but you could also, rely on that target that you set that would set it farther out, 100, 200%, 300%, that kind of thing. But the 50% rule, regardless of whether you're short-term or long-term, is still going to benefit every investor out there. Awesome. Glad to hear it, Benj. Okay, so that's using support resistance. Let's see. So those are just a few ideas of more technical ways of knowing when to sell. Let's get back into the regular view. There we go. Now, comes down to the proprietary ways, the 4 tips that we talk about of knowing when to sell. So these are going to be more VectorVest specific. And if you guys have learned something new already with some of those tips we've already talked about, don't forget, hit that like button, show me that you guys are enjoying today's stream, and hit that share button. All the shares help me out. 1 share equals 1 new person that could possibly, get their portfolio on the right track. So every share helps me out. If you haven't done that already, I appreciate it if you did. All right, so getting into the VectorVest ways to sell. There's a few key things that we look for. 1, look at the RT. RT is the short-term price trend indicator. It's cast on a scale of 0 to 2. If a stock's RT is above 1, that tells us it's in an uptrend. Below 1 tells us it's in a downtrend. Well, another way of thinking about it is if the RT is above 1, that means the stock is making you money. And if the RT is below 1, that means the stock is losing you money. So this is a great thing to look at, especially if you're brand new to investing. Look at the RT. If you have any stocks that you're just getting started with that, let's say you bought previously, sign up for VectorVest, sign up for the stock advisory, you build your watch list, sort it by RT. Look for any stocks that have a low RT rating. So if we do that, we get SLV, GLD, a few others here. And you can see the RT ratings, 0.87, 0.88, 0.88, 0.96. So let's take a look at silver. Has a RT of 0.88. Let's go ahead and add RT onto the graph. There we go. Remove support resistance. Less clutter. We can see RT has been steadily drifting lower for quite some time and finally broke below 1 for the first time. Back here, let's see where that is. Right towards those lows at 20. Actually, let's go take a longer look. So RT broke above 1 back here before it really started breaking out at around $14 a share. Stayed above 1 for quite some time, and then finally broke below 1 for the first time at around 21. So 50% gain as long as the RT stayed above 1. That's not using any stops, not using any other indicators, nothing else. Just focus on RT. If RT is below 1, that means the stock is not making you money anymore. It means if you have a decent gain in it, take your profit. You can always get back in at a later point if it starts turning back around, but at least you've locked in your gain. It's just like going to Vegas. I always talk about this analogy. It's just like going to Vegas. The best way to enjoy Vegas, if you guys are gamblers out there, go, use a little of your own money, make some gains or have some winnings there. Put your money as you're making the winnings. you take the equivalent amount of your own money and put it back in your pocket. That way, by the end of it, you're only playing with the house's money. And it's a lot more enjoyable when you're only playing with the house's money in Vegas than when you're playing with your own money. I have firsthand experience. And so, yeah, definitely more enjoyable when it's not your own money at risk, when it's, the house's money, extra gains, the profits that you've made that are making your money for you. So RT, a great indicator here. GLD, another one. You had a great run, even longer than 6 months. Ever since, let's see where that point is. About March. So when the pandemic fears started kicking in, and then rallied all the way from 140. And then finally, by the time the RT broke down below 1, you were trading at roughly 170. So still not a bad day's work in a long period of time. Not using any other stops to maximize your profits towards the highs, just focused on RT. So using RT below 1 is another great way or a great indicator to use to know when to take your profits off the table. And lastly, as you can see at the top of the graph, the rating there. As always, VectorVest gives a buy, hold, and sell rating on every single stock every single day. Now, this is exactly that, a rating system. It's not telling you, hey, hold this stock still, or sell that stock, or buy that stock. But the general thought process behind this is that when the market's moving higher, we have those green lights we talk about week in and week out. We recommend to buy buy-rated stocks, because that means to get a buy rating, all that criteria that we look at to give it that buy rating is met, and that means the stock's participating in the up market. Now, in a down market, when stocks are moving lower, we obviously recommend to sell rated stocks, because if it has a sell rating in a down market, that means it's not moving higher. It's participating in that sell off, and it's losing us money, and it doesn't make sense to hold on to stocks that are losing us money. Now, selling by the time a stock hits a sell rating is the last line in the sand. Typically, if you follow the other rules that we've talked about here today, you're going to be getting out well before it ever gets to that sell rating. But let's say you were out on a vacation for a few weeks, came back, something happened, you weren't paying attention to it. You notice one of your stocks had a sell rating when you came back. That is a great warning sign to say, hey, you need to give this some attention. Something has majorly changed with this one, and consider selling it now or holding at your own risk. So those are some of the key tips on, knowing when to sell. So once again, we've talked about stop criteria today. We've talked about using technical analysis. We've talked about using VectorVest proprietary analysis. You could also use market timing. Market timing is something that is our bread and butter here at VectorVest. It's why we've been around for 30 plus years. And so just simply using, something like confirmed calls, DEW, any of those we talk about in the nightly daily color guard report can obviously be used, as well as knowing when to sell your stocks. That is the one thing that we don't talk about as much anymore here on Facebook, but we do talk about it a lot on a nightly basis in our daily color guard report and our weekly special presentation. And you can get those right here on the homepage on the daily color guard report or the weekly special presentation. So all of that right at the palm of your hands, can't be found anywhere else out there. I see comments from time to time of, I can find this information. No, you really can't. That's why we've been around for over 30 years. The information VectorVest provides is unique and cannot be found anywhere else. So hopefully that helps you guys out. If you guys learned something new today, or if you guys have found a useful tip that you're going to start applying to your own portfolio, let me know in the comments. If you found this useful as well. As always, hit that like button, hit that share button. And from here, let me know the stocks you guys want to take a look at. We'll start to analyze any stock and show you how you can do so in less than 20 seconds. If you're already a user, you can do this exact same process exact same steps we're going to go through to analyze your stocks on your own at any given time. And if you're not a current user of the Stock Advisory app, there is a link in the description of today's video. You can click on, download it, and get the premium access that you see here today. Let's see. So how do I get a stock detail chart like the one shown here? So Jerry, that's the regular stock chart that we have in the mobile app. Will I be on again? As always, Jason, every Wednesday or every Thursday, I'm here live on our Facebook page. The only times I'm not usually here is when we have a holiday. So, for example, we have Thanksgiving coming up not too long from now, and I think that's on a Thursday. So that week we won't be here. Usually Christmas, everybody's traveling. We take a break for that week. But besides major holidays weeks, we're here every Thursday at 11 a.m. Eastern. So tell all your friends, have them come in. We're here to help you guys out. So can we please analyze PDLI? Sure. PDLI, you have, so we use these 4 indicators. We'll take our time with this one just to break it down, make sure everybody is on the same page, and then we'll really speed it up, show you how fast it can make your decision process. So the first indicator we look at is the RV, or relative value. This is looking at the long-term potential over the next 1 to 3 years of a stock and comparing it to a relatively safe investment, let's say AAA corporate bonds. So 1.09, we expect to see it slightly outperform AAA corporate bonds over the next 1 to 3 years. So has okay long-term potential. Then we look at the RS, the safety factor. This is the indicator of risk. It's looking at the fundamentals, and is the company making money quarter over quarter, year over year? Do they have that longevity that you want to see in a less risky stock? Well, with this one being below 1 tells us no, that there's actually more risk than the average stock out there in this stock. Then we look at the timing, 0.37, tells us this stock is falling like a rock right now. Therefore, the stock is not favorable. All 4 of our indicators are always going to be cast on scales of 0 to 2 to make it easy for you to make the analysis quick and simple so anybody can use it and make the right decisions for themselves. All right. JKS is the next one. Give me 1 second here. Let me get my cord seems to be getting tripped up. There we go. All right. So JKS. Great long-term potential, but it does have a little bit extra risk associated with it. You're still in a short-term uptrend. However, that does appear to be dissipating. Overall, the stock is favorable, but this could be one that, a 3 and an 8 would be useful. Looking at the RT, some of the tips that we've talked about here today could really come into play to help you maximize your profit on those. Apps, APPS. And also, I see a lot of people saying, been wanting to buy this now. As always, the reason why you see the color guard on the home page is because that is the most important aspect before you ever get into it. That trumps any individual rating on a stock. And as you can see right above me, VectorVest does not advocate buying any stocks at this time. Right now is not the time to buy, regardless of whether it has a buy rating, sell rating, hold rating, doesn't matter. Market timing tells us when to buy. And right now it's telling us not to be buying anything. The only other exception would be if you were buying something, contra ETFs may be something, hedge or some options for hedge. Those could be opportunities, but right now, the way things are going, our advanced declines, we are not buying anything today. Keep that in mind as we go through all this. All right, so looking at apps. Great long-term potential, less risk associated with this stock. On a short-term basis, still remains in an uptrend. So overall, the stock is favorable. Once again, though, we go to graph settings. Not support resistance. Let's go to moving averages. Turn on my 3 and the 8 once again. Zoom into a 3-month. Zoom into a 1 month. You had a great run with this stock. 3 and the 8 crossed here on the 19th. Look what the stock has done since that point. It closed that day at 36.43. Now it's trading at 33.16. On a short-term basis, that just saved you $3 a share, which is a pretty decent move, especially, if you got in on this most recent uptick at 30, rode it up to 42s. A few days later, you got out at 36. It's not a bad day's work, and you would have given up 50% of your total profit if you closed out today rather than closing out when the 3 and the 8 closed out. So hopefully that sheds some insight, and hopefully, you know, what we've talked about earlier in today's session can help you maximize that there. Can you sell when it's not time to buy? Yeah. Stop criteria, using that stop loss criteria will help you know when to sell. So if you guys are just tuning in a little late, that's fine. As always, our live sessions are recorded and are archived on the live tab on the VectorVest Facebook page. So you can go back and watch those replays at any time. Let's see. SR&E. SR&E, great long-term potential, but a lot of risk associated with it. It's falling like a rock here, so therefore the stock's not favorable right now. Let's see the next one. There we go. FSLY. This one, poor long-term potential, a lot of risk associated with it. It's in a really sharp decline, so overall stock's definitely not favorable right now. FNGD. So when looking at an ETF, they don't report quarterly earnings. They don't have fundamentals to them. Therefore, the key indicator to focus on is RT at 0.25, tells us it's in a really strong downtrend. Therefore, not going to be favorable currently. DOC. DOC, you have average long-term, a little bit better than average long-term potential. You do have a lot of risk associated with it. However, timing in a slight decline. Therefore, the stock's not favorable right now. Let's see what we got next. ICLN. There we go. So clean energy ETF, 1.25 on the RT. Still in a short-term uptrend. Does look like it's weakening a little bit, but if you're looking to try to hold in as long as possible, still short-term uptrend, therefore the stocks or ETFs still favorable for the time being. Enphase, ENPH. Give me 1 second here. All right, come on. Technology is great when it works, but when the cable... There we go. All right. ENPH. Got it back up and running. Sorry about that, folks. So ENPH, great long-term potential. You have great safety involved in this stock. Still in a short-term uptrend. Therefore, the stock's still favorable. This has been one we've been, following for a long time here at VectorVest. Great money maker. It's gone on a huge run as of late. So a 7% drop here today is really not a big move relative to the move that it's recently had. But if you're worried about it, just follow your stops. PEIX. Average long-term potential, a lot of risk associated with it. You have a really nice strong uptrend. Therefore, the stock's still favorable right now. Let's see, DKNG. So DKNG, poor long-term potential, a lot of risk associated with this stock. It's in a steady decline. Therefore, the stock is not favorable right now. EBC, poor long-term potential, a lot of risk associated with it. It's in a slight uptrend, not much though. Therefore, not enough to offset the risk that's involved with it, so the stock's not going to be favorable currently. Let's see. KTB, poor long-term potential, a lot of risk associated with this one as well. Really strong momentum. So it's a speculative stock that has a momentum play currently to it. Therefore, that momentum is worthwhile. Stock's favorable currently. JE. So JE, great long-term potential, but a lot of risk to get that potential. Timing at 0.01. This is not the time to be into this, folks. Not the time at all. Therefore, the stock's not favorable right now. Let's see. BBY. BBY, great long-term potential, solid fundamentals, so less risk associated with it. Steady uptrend. Stock still favorable right now. PWR. PWR, great long-term potential. Less risk associated with the stock. Really nice, strong uptrend. Overall, stock's favorable currently. EXROF. All right, there's one for you. This is a stock I've been watching for a while. It's very interesting. Definitely a speculative play, but I'm not gonna get into my own personal thoughts on this. We'll just analyze it for what we have currently. And if you're interested in doing some research on this one, make sure to do that. I'd definitely check it out. All right, so EXROF, poor long-term potential, a lot of risk associated with it, but still in a short-term uptrend. Unfortunately, that short-term uptrend is not strong enough to make the stock favorable at this time. All right, let's see. DOCU, I see people asking about DocuSign, and then we did Doc, and then so the F stands for foreign. So DOCRF, Cloud MD Software. That's the one you're looking for. Okay. So this one, poor long-term potential, a lot of risk associated with it. Speculative stock right now. Timing at 1.35. It's a semi-strong uptrend, but not strong enough to offset the risk and volatility with it. Therefore, the stock's not favorable currently. DHI. DHI, great long-term potential, less risk associated with this stock. About flat on a short-term basis. Overall, stock's still favorable though. Let's see. OESX. OESX, great long-term potential. A little bit of additional risk though associated with that long-term potential. Really nice short-term uptrend. Therefore, the stock's favorable currently. All right, we'll do a couple of more here for the day. So let's see. QDEL. So QDEL, great long-term potential. Less risk associated with this stock. You have a nice steady uptrend. Therefore, the stock's favorable currently. And last one for the day, we'll do NIO. And if I didn't get to all of them, or if I didn't get to yours today, I apologize. If you're already a subscriber, as always, open up the app, click on the little magnifying glass in the upper right, and you can do this same analysis on your own and your app. If you're not already a subscriber, click on the link in the description. You can get instant access to this and sign up for it, and you get all the premium access you see here today. All right, so with NIO, poor long-term potential, a lot of risk associated with this stock, but short-term momentum is really, really strong to the upside with this one. Therefore, stock's favorable. Now, if we take a look at the overview, once again, we're still 3 ticks into the yellow. VectorVest does not advocate buying any stocks at this time. We scroll down here, 3 yellow lights across the board. We would be, well, actually, we pulled up a little bit, so we're higher on a day-over-day basis, but still lower week-over-week currently. MTI is still dropping day-over-day, week-over-week. Primary wave is still down. So we still see a little bit of weakness with our indicators. However, they have picked up a little bit here. Looking at the advanced declines, now the advances are outpacing the decliners 47% to 41%. So basically did a flip-flop from what we saw earlier today. So once again, folks, thank you all for tuning in this week. I hope you all have learned something that can help your own portfolio, help you get on the right track to becoming financially independent, because week in and week out, that's our goal here, is to help our users and help you guys out there become financially independent and make money in the market. If you found today's session helpful, don't forget, as always, hit that like button, hit that share button, turn on notifications on our Facebook page so you get notified every time we go live. And the more likes we get on every video, the more shares we get on every video, tells us that you guys are enjoying these sessions and tells us that you guys like the topic that we're talking about here. So on that note, hope you all have a great rest of your trading day. Take care, be safe out there, and we'll see you next Thursday at 11 a.m. Eastern as we kick off another live stream here on Facebook. Bye. Bye for now, everybody. Take care.